Good. So you guys should join with this link. So, like I said, the BOS is already going down, which we are currently in a live chart. All right. So we have these lows at the bottom of this chart. Any BOS that is broken, once a BOS is broken, we have the lows. Unable to join. I don't think this one have what's it called? A allowed invitation. Please, please, please. This one don't have anything like invitation, please. Just join. It will allow you, right? This one does not have any invitation, please. All right. It don't have an approval. It does not have an approval. Please just join. Any approval. So this is the BOS. All right. The BOS are breaking down in the sense of I use my trend line to catch. Like I said, if you can't easily detect the um, participants, are you seeing my chart? I believe you guys are seeing it, right? Are you guys seeing the chart?
Yes.
Okay. All right. So these BOS are breaking down. All right. You have the lows. These BOS, they are kind of telling us that the market is going down. All right. The market is breaking structure to the downside, and which we are looking out to sell, for a sell, for a sell. We are still selling. If listen now, listen very careful. I want to make a point here. I really want to make a point here. All right. Watch this chart very careful.
Yes.
Watch this chart very careful. In every break of structure, we have what we call retracement. Like I said before, it moves like this, moves like this, just like that, continuously, just like that. All right. So if you watch these guys, you can see what I was trying to say, that every impulsive and retracement phase, they're kind of being choppy. It's not what you can just start trading. All right. Watch here now. Here is the lower high of this market. Here is the lower high of this market. It was respected. Market did not do this shit. It did not pull off to this upside, but rather it moved from this point. No, it moved from this point, hit here, came back down, and wanted to tap in here, but did not tap in here and started going down again. That's to tell you that the market is respecting this guy, is respecting it. So market has no right for now to break this guy except there is a force or there is a high pressure coming from a buy a buy demand that will make this market to break this guy to the upside, and then we'll see what we call there's what we call change of character, which for now I won't be introducing it to you guys. All right, as this class keep on going, as we are studying market structure, more topics are coming out. It's just like, let us say everything is market structure. All right, for now we are studying the BOS and the lower high, the lower low formation. So the market is still respecting this guy. And what did you see? We have another low here, which market respected it very well. Market has been breaking structures has been broken to this downside. Again, a structure has been broken here. This is the last lower high. Let me make it clear with writing so that you guys can understand. Here is lower high. If you remember, I did all of this thing down. I write them. Here is your lower high. Here is your lower low. All right. Same thing happens to here again. Your lower high. Market is respecting it. All right. Another break of structure, which is here, and which we expect market to respect this guy when he try to do that impulsive retracement phase. After breaking it, we see the market coming back here and still respect it back down again, breaking another structure. All right. Note this. Note this. When a lower high is violated, we have what we call change of character. That's the trend has already changed character. All right. When a lower high is violated or a lower low is violated, no, a lower high is violated or, okay, for an uptrend, we have the higher high and the higher low. When the higher low is violated, higher low is violated, we have what we call a change of character to the downside. All right. When the lower high is violated, we have a change of character to the upside. So that was what I was trying to explain to you guys. When you see the market violate the trend line or the lower high, it tells us that the market is already moving to the upside or to the downside. So you shouldn't be expecting to trade on this kind of market by like what I mean by trade on this kind of market, looking for a sell again when this lower high has been violated, which tells you now it's the right time for you to start buying this market. I could remember somebody on the group when a mentor posted the guy's results. I saw where the guy bought from. The guy bought from somewhere here, and I think the guy was targeting these points as his take profits. Probably these points. I saw it on the sorry, kind of picked the wrong tools. I saw it on the, oh shit, what have I done? So I saw that stuff on the chart and I was like, wow, this guy is making a good move. So the guy bought from here and targets this upside, which is literally nice. It's a nice way because the market has already changed its dynamic character totally and starts buying instead of selling, and it started going to the upside. So the guy did the right um, movement to actually catch that newly implosive move. All right. And if you watch this place, you watch this retracement, you can see it's very choppy. It's not even, let me make it good so you guys can see it. It's not advice. It's not even making sense, except you are a good trader. You are a good technical analysis trader. That's when you can trade this kind of move. You trade this phase. You can see the implosive move, very smooth and a smooth run. No bullish present that much. You can see it, no bullish present. All you see here is bearish present to the downside. Look at this implosive move. You can see the implosive move, very choppy. And look at this, you can see this retracement move. There is kind of a drag between the bears and the bulls. And you can see this part again, very move, sweet right to the downside. The same thing goes here, sweet right to the downside. Look at this point. The candles we're having too much wicks and it's kind of pushing up and down, pushing up and down, which you won't be very okay trading this kind of market. You'll be like, your mind will just be caught, your mind will just be flying when you're on this trade. You see that, oh, the candle is coming down, the candle is coming down, and you see the candle close. The next candle you see, it's candle going against you. So it's not advisable to trade the retracement phase. And you can see the implosive move, they are moving very fine. Sometimes you see my chart, I post this BOS. I'm kind of getting the direction of the market. That's why I'm using that BOS aspect. to let you know that this market is going down, is breaking down, is going down, is going down. So when I see something that will make the market changes formation, I'll kind of indicate either taking the BOS to the upside, which I'll tell you is going up, it's going up, it's going up. So that's the way I just use this my BOS on my own trading aspect. And you see me sometimes I put these angles like this, and I click point of interest. You see it's having a point of interest, like a point of interest for either a sell or a buy. All right. So you can see this point of interest for a sell. You see POI, it's called point of interest, where I decide to trade from. So I decide to trade from because I see that the market has been breaking down. So I expect the market to move to this particular point again. Then I'll start selling again. So that's what I'm trying to do, catching the impulsive move of the market. So currently, this price is on a downtrend, is breaking structure to the downside. So I should be expecting you as a trader to pick this market when the market moves back to this point and start selling to the downside. This is what we call a scenario of a downtrend market structure, right? This this is, you find this lower low here and you find this lower high at this top, all right? You told me earlier. Okay, thank you. So you find this lower high at this top. All right. So it's a scenario of an uptrend and a downtrend. So let's look for an uptrend move. Then we look for a choppy phase. We look for a consolidation. That's the three type of markets you find on the Forex or any other dynamic market. All right. Let me don't get you guys confused. We can use this one. You can use this guy. Okay, let's use this guy. Or let me look for a clear trade that is on an uptrend. Then we use it for demonstration. Okay. Oh shit. Um, we're not having any trade right now, and I should have been eating on this trade, but nevertheless, bless God. Okay. I'm just trying to find a trade that's looking to the upside. Then okay, this guy is looking to the upside, but it's not yet moving one impulsive phase. Okay, good. This is this is a trade that's already looking up to the uptrend. All right. So if you watch now, we have I traded this trade and I got stopped at, but it was very painful because I literally did not gain enough from the trade. So let me wipe out all. Okay. So this trade is already in an uptrend. We already have BOS breaking. Let me see from the, we already have a BOS breaking. If you watch here, if you watch this guy, it's a BOS. It's a BOS, break of structure to the upside. All right. Break of structures to the upside. So this is typically what the market structure is doing. All right. It's typically what the market structure is doing. And if you understand this, it will be very easy for you to know the kind of markets you are trading on. Is it ranging? Is it choppy? Is it an uptrend? Is it a downtrend? All right. And we have the lows, the higher lows of this market. So if I make mistake saying a lower high, I'm sorry. We have the lower high though, but we have the higher low. All right. So get that at the back of your mind, that after a break of structure, you are expected to see a new higher low on an uptrend, all right? So we have the higher lows of this market, just like this. We have the break of structure here. The market will have to pull back, giving you that retracement phase. And if I say, okay, let's move down to another time frame to check this retracement phase, you're gonna see that it's very, very risky to trade from. Watch this guy, watch the kind of move this market just providers here. Watch this kind of move. Very smooth and accurate to trade. You will take this kind of trade from here and you just go to bed and start sleeping because definitely the market will run to the upside again, hit your take profits and gives you enough money. But when you take this kind of market, try to sell down here, you are going against the trend. All right, you're going against the trend, and it's very very bad when you trade against the trend. In your candlestick say the trend is your friend when you don't go against it, but when you go against it, the trend will tell you that he's not your friend. It's gonna really do with you. So when you're trading this kind of market, I expect you to start looking for a buy. If you can't find your BOS, take your trend line. The way I plot it, take your trend line, just draw from the last tip, even if it's the week, but do not draw from the body of the candle. From the week, all right, from the week to the next, either the week or across the week, do not draw from the body. It will give you your direction of your trend. Your internet connection is unable. It will give you your direction of your trend, which will tell you this market is in an uptrend or in a downtrend. Then you start looking for your BOS where you have your break of structure, break of structure, break of structures, and start marking them out. All right. You start marking those break of structure out. Then you mark your higher lows, your higher lows, higher lows. Let me higher low. HL. These are your HL. Somebody, you out there will be asking this question. You in your market structure, you have what they call one-time OTE. Yeah, OTE. It's called one target or one-time entry, something like that. One-time entry. This is where you have it. When you see something like this. So if you have not read your market structure, please go and do. All right. You have this OTE here. You see that OTE here. Somebody's asking a question. Wait, I will answer your question. Just hold on. OTE, OTE. I will answer your question. Just wait, please. All right. You see it here. It's called one-time entry, and this is exactly what we are doing here right now. All right. This is where you have your OTE as well. You have the same OTE at this point, which gives you one-time entry. One-time entry. One-time entry. All right. On your higher lows when it's in an uptrend. So let me check on the person who's writing. The network is skipping. I can't hear you clearly. Maybe from your side. All right. I hope you guys can hear me. Others can hear me, right? Huh? Benson, can you hear me? Brown. Okay, Brown, can you hear me? If you guys can hear me, please let me know if you can't hear me so I know what to do right now. Okay, I believe you can hear me. So this is where you have the OTL. This same thing happens in a downtrend. Is it? I still can't even hear you guys clearly. My voice is breaking. Drop your comments. Drop your I think my voice is breaking. I can hear myself. It's my network.
I can hear you clearly, sir. I can hear you clearly. Yeah.
Okay. Thank you. God bless you. I appreciate that. So this same thing happens on the same lower time frame. I said the lower time frame. Oh, they brought our light. Thank God you guys can see my face now. So, oh, I can hear you clearly. Oh, God bless you. God bless that guy. So we still have the same OTL on the same downtrend. All right. So I forgot to introduce it to you guys, but have it at the back of your mind. This OTL happens when the market break a new BOS. When you have a new BOS like this, all right. I don't want to load you guys with information, so I will advise you after this class, it's an assignment. Please just try as much as you can. Bring out the BOS on your live chat, all right? Just draw this BOS. We start with it first. Then you have this BOS, you have this break to the downside. Then expect the market to return back to these points. Then the market will still move back down because the market have to respect the lows, all right? So let me put it back. The market have to respect these lows. So that's where you have this OTA, one-time entry. All right. As time goes on, more classes will be coming up. As time goes on, more topics and more classes will be coming up. Where I'll be showing you guys. I don't think my laptop battery they last again. So more topics will be coming up and more ideas will be coming out on trading. Where, please, in a noisy place, meet yourself. So more topics will be coming out and more ideas will be coming out on the forex trading, which I'll be showing you guys like what's it called? Um, how to analyze, how to make decision before you take a trade, right? Maybe mentor will do that from his own end. He will do all that. So if he permits me to take the class again, I will do. So right now, I'll advise you guys to take your guys go in your charts, start bringing out this BOS break of market structure to the upside, to the downside, and higher high, lower low, lower high, and try to fix in this OTL. Then you drop them on the group, all right, for us to see, for us to like review it. If I have the time to review it, I'll review it and tell you guys the one that I literally look very okay for, like maybe who tried and who did not try, who have to improve or something like that. So this is for the OTL, that's the uptrend and the downtrend. So let me try to look for um, a ranging market and a choppy market, all right? So this is what we are trying to say. For a ranging market, a market that is ranging, which is not advisable to trade, all right? This market is ranging. We have a support here. Like I said before, it's either you have two touch to get your support, and which we have here, two touch. But the market has no direction. Why? A message on the group. Can this analysis also work for synthetic trading? This is my first time. Yes, it works in any market, crypto, stock, forex, synthetic. That's the binary. It works in any market. It works in any market. The only aspect you just have to understand is for you to know it when you see them. All right. It doesn't have restrictions. It works in anywhere, just for you to understand them when you see them. So if you watch this place right now, the market is kind of ranging. So like I said before, I did the drawing when I said you might either see the market move and did not get to the next support and then move back again, take you out, then before going to the support zone, came back again, hit your second resistance, still move back, did not get, just moving in a way that you can't catch that move completely because it's in a ranging market. All right. So this is the ranging market we are talking about. And this ranging market, we have just two dynamics here. You have the high, you have the low. You have the high, you have the low. Have the highs. Here now, there is no high, there is no low. It's just choppy. It's just choppy. So inside the same ranging market, you have the choppy market here, which you can literally get the accurate support or the accurate resistance of this market, which is just here. So you can't trade this market. It's choppy. So it's not a good market structure to trade on. This one is kind of being good to trade on, but you can easily get stopped out because they have no direction now. The bears and the bull are just dragging this market. They are just dragging at this point. And if you watch, they have been dragging from December 2022 till this February 10, that's Friday 10, February 2023. So this market has just been here, moving these choppy characters, and people are just been trying to trade it and they are losing money or they are gaining money. Some people trade inside this point, they just get confused. Some even entered here and they are expecting this market to run down. But watch, the market only run down a bit and then came back, took their stop loss, went back down again, still come back and push. So finally, along the date of 2023, the market finally decided to have a direction, which started this movement to the upside, and which you are just seeing now. All right. So these are the type of markets we have. So what you will do for me now is to go on your chart, draw out the uptrend, the downtrend, putting your lower high, lower low, break of structures there. All right. Then specify if you can label them. I don't know if you know how to use trade view to label, but even if you don't know how to label, just draw it out and say this is a downtrend. Draw the other one out and say this is an uptrend. Then you send it on the group. Why for the ranging market, just if you can put this line, identify this line, put it, send it on the group, say this is a ranging market. Then identify the choppy market, draw it out, say this is a choppy market. All right. Choppy market has no support and resistance. You hardly see a support and resistance because for me, I can't trade this point. I can't say this is a support and resistance. The same thing happens here. Let me show you something. This same particular point is a choppy market, which has no support and resistance. Here, the same thing, no support and resistance. So they are choppy markets. If you can identify them, just bring them out. It will give you mind for you to know when the market is moving and when the market is not moving. Then before we talk of how to do analysis, how to get your entry, how to get your exit. Here is a choppy market as well. So it's not advisable to trade here. You get me, guys? It's not advisable. The same point here, the choppy market. So just try as much as you can to bring out this what would I say? Bring them out from your charts and identify them first before we can start diving inside. Because when we start diving inside, I won't be explaining all this to you guys because I will assume that you guys have already known all of this. So if you have any question regarding this class, please kindly ask. All right, just unmute yourself and ask. I'm coming. Let me shift this to where I can have what's it called? Um, let me see. Battery. All right. So ask your question if you have any question. All right. So ask before I call it a day. Who have a question should ask. So ask. Just unmute yourself and ask your question. Right. Ask your question. Yeah. Someone is using the message. We're already running out of time. Boss, what's the best time frame to trade currency? All right. So, to be very honest, it has no best time frame to trade currency, depending on how good you are. You are good with analysis. All right. If you are good with technical analysis, you can trade any time frame, be it the 5 minutes, be it the 15 minutes. But I'll advise, if you read your market structure, it specified them there. It said if you are a scalper, your time frame analysis should be from the 4 hours, 4 hours, 1 hour, 30 minutes, and your entry should be from the 15 minutes, 5 minutes, and 1 minute. So write down the person that asked me that question, what time frame is best to trade currency. Why, if you are a swing trader, your analysis time frame, all right, where you have to analyze should be from the weekly, the daily, and the 4 hours should just be an observation for you to just check. Why time frame to take the trade should be your 1 hour, 30 minutes, and 15 minutes. Sometimes the 5 minutes, or you literally can use the 4 hours as well. Why, if you are a position trader, which I don't advise anybody to trade as a position trader. If you are a day trader, you can use the daily time frame, the 4 hours, and the 1 hour. You take your trades, you enter your trade from the 15 minutes, the 30 minutes, and the 5 minutes. All right. So that's a time frame advisable for us as a trader to trade from. So if you have any other question, you need to unmute yourself and ask, because we have no time again before this class will end. All right. So just unmute yourself and talk. Much better dropping message. So, or you can still drop your message if you have a question. I'm still watching it. Okay, thanks so much, boss. Yeah, you're welcome. Any other person? Ask. Any other person want to ask? Ask your question.
Good afternoon, sir.
Yeah, good afternoon.
Hello, how you doing? How you doing?
Yeah, I can hear you. Ask your question. Speak now. Huh? Speak, I can hear you. I think we lost that person. It's no longer talking. So speak, I can hear you. Ask your question. I still online. I ask. If you have no question, let's call it a day. Who's there again? Should ask. So I dey, I dey active. I dey answer or not. If I go sleep now, already. The I want do now to go sleep. So ask. No question. I bet you guys are already off this market.
Please, good evening.
Yeah, good evening, bro.
Please, I know the topic is now about margin, let me say, lot size. If someone
Okay.
wants to start a trade $100, so what's the best lot size or margin for it?
Okay. Are you asking if someone want to trade
$100, like one side trade $100. When I want to fund the account of $100.
yeah,
So what's the best lot size or margin for
okay. See, for
it?
if lot size to use to trade, right?
Yeah.
And this analysis also work for synthetic trading. This is my first time. The person asking this question, if the analysis can work for synthetic trading, yes, it can work. It works in any currency, yet it can work. So for you, $100 account, there's what we call. Are you listening? There's what we call risk appetite. All right. If you can risk, if you can risk your full $100 account, if you can risk your full $100 account for one trade, it's fine. If you know that that trade will go your way and you're gonna make profit on that trade, it's fine. But if you can't do that, there's this site called um let me try to remember the site. Cash something like Cashback Forest. Yeah, Cashback Forest. I think so. Yeah. So I'm introducing you guys to another. Let me see if I can share the screen of that. Okay, my screen is already shared. So this Cashback Forest helps you to calculate your loss size to use for a particular trade. All right. If you can't use it's called position and risk calculator. Huh?
Okay.
So for instance, you are trading let's say you are trading gold. All right, you are trading gold, SA gold, or let's use USDJPY. Anyway, what did you say?
That's I'm listening.
Okay, for instance, you are trading a USDJPY. You've already analyzed and you want to take the trade. So on this cashback for us, it tells you your stop loss in pips. So on this here, we have okay, let me show you something so you can understand what I'm trying to say. On this trade view, we have something that easily calculates our stop loss and take profit. Either you are going long or you are going short, all right? So for me now, I'm going long, all right? So my stop loss in pips is about 28.5 pips stop loss. So you come on this cash back for us, you put it here, 28.5 pip stop loss. You tell them your amount in your account. You said you have $100 account, all right? It tells you 0.1 is 0.01 per 1 pips. You tell them the amount you are risking in that your $100. Are you risking $10? Are you risking $20? If you are risking $10, you tell them you're risking $10. All right. So once you do this finish, once the guys say on Wednesday, so once you do this finish, you press calculate. Once you've already input the amount you want to risk for that trade, and this tells you your stop loss. I don't think this is changeable. I don't think it's not changeable. So 0.01, it will show you what you're going to be risking, amount inside. So your stop loss, okay, let me see if I have the trade unit here. Okay, was Forex. Let's see, view, no. Okay, your lot size, we're going to be 0.04. Are you getting it?
Yes, I'm getting it.
Okay, so when you use 0.04 lot size, if that trade go against you, you are losing $10 out of your $90 account, out of your $100 account, and the amount at risk is $10. All right. So if you want to risk $50 out of that $100, this is risk management. I'm teaching you guys risk management right now. If you want to risk $50, you just put $50 out of your $100, click it. It will tell you use 0.02. Do not go exceed this lot size. Your lot size should be 0.02. Once